Assalamualaikum warahmatullahi wabarakatuh. Thanks for the opportunity. Let's introduce myself. My name is Putri Aulia Dewi and my student number is 113. I will present the exercise and exercise about cash and reconciliation bank chapter 7. Now I would like to explain about brief exercise 7.1. Kraft Enterprises owns the following assets at December 31, 2019. Cash in bank saving account 68,000. Cash on hand 9,300. Tax revenue 31,400. Checking account balance 17,000. Post-date checks 750. Certificate of deposit 118 day 19,000. What amount should be reported as cash? The answer: cash in bank saving account 68,000. Cash on hand 9,300. Checking account balance is 17,000. Cash to be reported 19,400.
Assalamualaikum warahmatullahi wabarakatuh. Thanks for the opportunity. Let's introduce myself. My name is Cynthia Devi Rahmawati and my student number is 435. Now I would like to explain about brief exercise 7.2. Rest in place. Use the gross method to record sales made on credit on 1st June 2019. It made sales of 50,000 yen with terms 3/15 and /45. 1. 12 June 2019. Resident received full payment for the June 1 sale. Prepare accurate journal entries for resting place. Answer: the June 1st account receivable is 50,000. Sales revenue 50,000. 12th of June, cash 48,500. Sales discount 1,500 and account receivable is 50,000.
Thanks for the opportunity. Let's introduce myself. My name is Trinur Sama and my study number 441. Now I would like to explain about cash and reconciliation bank. The question is BE 7.3. Use the information from BE 7.2. Assuming resting CO, use the net method to account for cash discount. Prepare the required journal entries for resting CO. My answer is 1st June. Account receivable 48,500 in debit and sales revenue 48,500 in credit. 12 June, cash 48,500 in debit and account receivable 48,500 in credit.
Okay, thanks for the opportunity. My name is Andrea Saditendayani. My student number is 438. So I would like to explain about BA79. Modus most company had the following information to an account receivable from counting crown ENC initial face value is 20,000 euro, payment received 3,000 euro, provision for uncollectibility 5,000 euro. Determine the amortized cost for the counting cross receivable. Solution: initial face value 20,000 euro, less payment received 3,000 euro, plus 5,000, provision for uncollectibility 10,000. So amortized cost is 14,000 euro.
Hello, thanks for the opportunity. Let's introduce myself. My name is Nurrohma. My study number 2019-30442. Now I would like to explain about Feynman Place designate Jill Holland as petty cash custodian and established a petty cash fund of 200 euro. The fund is reimbursed when the cash in the fund is at 15 euro. Petty cash receipts indicate funds were disbursed for office supplies 94 and miscellaneous expense 87 euro. Prepare journal entries for the establishment of the fund and the reimbursement. Answer: petty cash 200 euro in the bed and cash 200 euro in credit. Supplies 94 euro in debit and miscellaneous expense 87 euro in debit. Cash over and short 4 euro in debit and cash 185 euro in credit.
Now I would like to explain about exercise 7.6. The question regarding sales transaction presented below is information from Lopez Computers. July 1 sold $30,000 of computer to Smallwood Company with trim payment within 15 days. After the transaction, there will be a 3% discount with a credit trim of 60 days. July 10. Lopez received payment from Smallwood for the full amount owed from the July transaction. July 17. Sold $250 in computer and peripherals to the Hernandez store with terms payment within 10 days after the transaction. There will be a 2% discount with a credit trim of 30 days. The answer: July 1 account receivable 30,000 debit, sales revenue 30,000 credit. July 10 cash 29,100 debit, sales discount 900 debit, account receivable 30,000 credit. July 17 account receivable 250, sales revenue 200. July 17 account receivable 250 debit, sales revenue 250 credit. July 30 cash 250 debit, account receivable 250 credit.
The next question is E 7.9. Computing bad debit and preparing journal entries. The trial balance before adjustment of Stefan Inch show the following balance. Account receivable $8,000 in debit and allowance for doubtful account 1,750 in debit and sales revenue 580 in credit. Instruction: give the entry for estimate bad debit, assuming that the allowance is to provide for doubtful accounts on the basis of A, 4% of gross account receivable, and B, 5% of gross account receivable, and allowance for doubtful account has a $1,700. And my answer is bad debit expense 4,950 in debit and allowance for doubtful account 4,950 in credit. So a result of that 4,950 from 8,000 multiplied 4% plus 1,750. B, bad debit expense 5,800 in debit and allowance for doubtful account 5,800 in credit. So a result of that 580 multiplied 1% total 5,800. Thank you.
Now, I would like to explain about exercise 714. On 1st April 2015, Prince Company assigns $500,000 of its accounts receivable to the Hibernia Bank as collateral for a $300,000 loan due 1st July 2015. The assignment agreement calls for Prince Company to continue to collect the receivables. Hibernia Bank assesses a finance charge of 2% of the accounts receivable, and interest on the loan is 10%, a realistic rate of interest for a note of this type. Instruction: A. Prepare the 1st April 2015 journal entry for the Prince Company. B. Prepare the journal entry for Prince collection of $350,000 of the accounts receivable during the period from 1st April 2015 through 30 June 2015. C. On 1st July 2015, Prince paid Hibernia all that was due from the loan is secured on 1st April 2015. Prepare the journal entry to record this payment. Answer: A. Cash $290,000, finance charge $10,000, and notes payable is $300,000. B. Cash $350,000 and accounts receivable $350,000. C. Notes payable is $300,000, interest expense $7,500, cash $307,500.
Thanks for the opportunity. Let's introduce myself. My name is Nur Rohma. My study number 2019-310-442. Now I would like to explain about exercise 7.17. Transfer of receivable with 20 Bryant Ltd. Factor receivable with a Bryant amount of 200,000 euro to Warren Company for 190,000 euro and 20 L credit losses instruction. Prepare the appropriate journal entry to record this transaction on the books of Bryant Ltd. Answer: cash in debit 190,000 euro, financing charge 10,000 euro in debit, liability to Warren Company in credit 200,000 euro. Thank you.
Okay, next I would like to explain about E718. Bonanza factor 250,000 euros of account receivable with Wincor financing NIC on without guarantee, no research basic. Wincor financing will collect the receivable. The receivable record of transfer to Wincor financing on 15 August 2019. Wincor financing assess a finance charge of 2% of the amount of account receivable and also research on amount equal to 4% of account receivable to cover probable adjustment. Instruction A. What condition must be met for a transfer of receivable with guarantee to be accounted for a sale? For as a sale, according to the EISP, determining whether receivable that are transferred can be accounted for as a sale is based on a evaluation of whether the seller has transferred substantially all the risks and reward of ownership of the receivable. If substantially all the risks and reward of ownership of the receivable are transferred, then they are direct account for as a sale. This is likely the case here because there is not guarantee. Number B. Assume the condition from part A are met. Prepare the journal entry on 15 August 2019 for bahanan the record the sale of receivable. The following journal entry would be made. The cash 235,000 due from factor 250,000 multiplied 4% is 10,000. Loss on sale of receivable 250,000 euro multiplied 2% is 5,000. So account receivable is 250,000.